This is Brant from TradeGuild.net. It is the 15th of September 2008. Horrible day on the market. I'm not going to go through all the stats. You can go to the newspaper anywhere and see what they were. But, stuff like, worst day in the S&P since the first day of trading after 9/11. 500 plus point day down in the Dow. Basically, Lehman Brothers falling apart over the weekend, going into bankruptcy. Lehman's going to sell off a lot of their assets. A lot of those same assets are held by a lot of other companies, Goldman Sachs or Merrill, Morgan Stanley. They're going to have fire sale prices. Those fire sale prices of Lehman, as they liquidate, are going to reduce the value of the assets of all these other companies. So here comes another round of financial write-downs. So financials took it on the chin today. Today I want to do something a little bit different at TradeGuild.net. I have a contributors link or donate button. And for contributors, basically I've been doing a contributors letter. What I do is I send out a letter a couple times a day. I think today I sent out 3. It's just a way of saying thanks to them, really, but letting them know, what I think is going on in the market, where I see opportunities, where I see problems. Thursday, September 4th in the morning, I released what I called a major market call. I'm going to release that on the site tonight, the complete letter with the charts that went along with that. But I just want to go over real quick kind of what we were seeing. First of all, I talked a lot about September. September being a horrible month in the market. As a matter of fact, some of the worst one-day point declines have come in September for the Dow, the S&P, and the NASDAQ. And of course today, we see that hold true. So I go through September and a couple of the things that happened with Rosh Hashanah and Yom Kippur and some other things, but September basically being a very bad month. But what I primarily focused on was the Qs, which is QQQQ, the Power Shares ETF Trust for the NASDAQ 100. So instead of buying all 100 NASDAQ stocks, you buy the Qs, and you basically have the same thing. You have that index. So what I was showing was this triangle that you can see, red trend lines here, and what I showed was a 5-day chart. So we're going to move out to a 5-day chart. Bull market back here in 2002, 2003 is when it kicked off. We see triangles quite often in trading, and they last anywhere from a week to a couple weeks, and they're continuation patterns. Like here we'd have a preceding uptrend, congest, and then they break out to the upside, they continue. But when they're this big, and we're looking at a 5-day chart right now, they're very rarely continuation patterns. They're more often top or bottom patterns, and in this case, since we're already in a primary bear market and we're at the end of the primary bull market, I'm calling this a top. One of the things I was pointing out about this top, remember it's a 5-day chart that we're looking at, is the volume. And if you look at the volume, red is when we closed down, and green is when we closed up. So what do you see? I mean, you see big, huge red spikes all throughout this period of Q2, Q3 of 2007 right through to the present. And the green volume days when we're closing up, prices moving higher, are very small. So basically what we're seeing here, a top is going through a distribution pattern. Distribution meaning the big boys, the big brokers, the big banks and everything are selling their shares, and that's what's happening here with these big red volume bars. So this was a very dangerous pattern, I thought, and this is why I want to point it out. And typically with triangles, we have 5 points of contact. We can call this 1 over here, 2 over here, 3, 4, 5 over here. Usually at 5 points of contact, they tend to break out one way or the other. And with a triangle, you have to think of it like this. It's like a coiled spring, and the closer it gets to the apex, the point of the triangle, the more power it has. They're very strong directional moves. Let's look at a 1-day chart, actually. This is, each bar represents 1 day. This is the same triangle. Back here, we're looking at Q3 of 07. Here's January of 08. And still we see these big red volume bars, typical of distribution. And what we were looking at on September 4th, we were back in this area. What we were looking at, what's called a bull flag. Here's the flagpole, here's the flag. This is bullish pattern, it's a consolidation pattern, and typically it will resolve in the direction of the preceding trend, which was up. So we're looking at a bull flag that looked like it wanted to break out to the upside. I had said in this major market call letter that this is not what I thought was going to happen. In fact, um, at that point, at that day that it was released, I think what had happened was we had met this lower line of support over here. I gave a couple of different scenarios that I thought were likely, but they all basically resulted in one form or another of this flag breaking down below 44.50, which is somewhere about this level, which is also our triangle, and we would have a failure of this triangle with a strong directional move. Today we did see a very strong directional move and on huge volume. A couple different scenarios. One, I anticipated seeing a little bit of a rally. I thought maybe that we could get up to even to this point, but really I was looking for at least what I would call kissing the consolidation pattern goodbye, going up, rallying, kissing it goodbye. And we were pretty much on track to do that. It looked like Thursday, Friday over here we had some big days up. Over the weekend, this whole Lehman Brother thing where their deal fell through just totally annihilated the technicals of this pattern, and the market sentiment just took over. You know, it was a good call, I think. If we look at the pattern, we zoom out, you can see that triangle has now broken down. We're looking at a target, a downside target of somewhere around $30. Now, no market goes straight down, no market goes straight up. So a couple things can happen. Today we had this real bad day, but we've got huge volume here. A lot of times when we see huge volume, it's a turning point, and what I mean is a short-term turning point, which means we may see a move back up, and we may actually even see that kiss goodbye of this triangle. Tomorrow's the Federal Reserve meeting. Traders are at this point pricing in an 80% likelihood that we'll get a 25 basis point cut. There's some talk that we may even see an emergency Monday night meeting. Don't underestimate the danger of the situation that we're in right now. Financials are really, really in crisis mode. This is a very, very big problem. And these Qs that are at $42 right now could easily hit $30. And what $30 would look like if we back out would be in this area, like around where we were in 04. So it's a major move down. One other thing that I think may point to a move higher in the next few days is the VIX, which is the Chicago Board of Options Volatility Index, the VIX. It's an inverse, or has an inverse relationship with the market. As a matter of fact, I'm going to put a comparison symbol up for you. The S&P 500, we'll use the spiders as a proxy. And if I back out, you can see the inverse relationship that the VIX has with the market. So basically when we see spikes like this, that represents a lot of fear in the market, and typically those are turning points. And you see we saw the spike, then we got a rally. Over here we see another spike, we get another rally. Well, guess what? Today, a huge spike. So possibly we're going to see a little rally bounce. Conversely, dips down here, it represents apathy or complacency, and we see sell-off. So you can see the dip, and then here's the sell-off here. Over here's another dip, and then we get another sell-off. The VIX has changed over the years. It's actually, if you want to see the original VIX that traders were using back in 2000, 2001, you have to use VXN. They've changed it, and I will probably do a post about that. We're looking at maybe some upside, potential upside this week. If you read the rest of the major market call letter, you're going to see that this week is typically a very bad week. Next week is even worse. So I'm going to post that on the site. Take a look at it at tradeguild.net. There's a hyphen between trade and guild. And if you have any questions, feel free to shoot me an email. If you want to become part of the contributors letter, you want to receive that letter, I have a link. It's a PayPal link off to the right on the blog. I don't ask for any particular amount. You donate whatever you feel like donating, whatever you feel this information is worth, and I'll put you on the list for a period of time that's basically commensurate with your donation. You'll get intraday updates of what's going on in the market and where I see opportunities, where I see trouble, and we can go from there. Okay, thanks. This is Brant from TradeGuild.net.